just to briefly introduce myself and everyone on the panel. Hopefully everyone has had time to grab a cup of coffee. My name is Jasel Chauhan. I'm a partner and head of international finance at Dickinson. As a lawyer, I'm automatically the most boring person on the panel, so I'm going to start by introducing the panelists. To my left, Danai Kotsia from ABN AMRO. Danai is the newly appointed Head of Lending Transportation at ABN AMRO Athens branch. Next to Danai, we have Philipp Wuenschmann from Berenberg. Philipp is the Global Head of Shipping in the Corporate Banking Division at Berenberg. Next to Philipp, we have Evan Cohen from CIT. Evan is a Managing Director and Group Head of CIT Group's Maritime Finance business. Next to Evan, we have Vassilios Maroulis from Citibank. Vassilios is a Managing Director and Head of Central Eastern Europe, Middle East and Africa, Shipping Logistics and Offshore at Citi. That was a tongue twister, so I'm pleased to have... that was a tongue twister, but I'm pleased to have got that. And Christos Tsakonas from DNB Bank. Christos is the Global Head of Shipping at DNB. And to go straight to the questions, I think we'll start with one of the usual questions, which gives each of the panelists and the bank a chance to basically sum up how last year was for themselves and the bank, what they see for the next year, but also because we're at the turn of a new decade, I think maybe a quick look back at how the last 10 years were, and something a little bit more prospective, looking at what's to come in the next 10 years. Danai?
Thank you, Jasel. The last decade has seen a huge expansion in the loan portfolio of ABN AMRO, specifically from the years 2010 to 2018. Following a moderate risk profile and anti-cyclical approach, and using the expertise that the bank has gained over the decades there in shipping, allowed us to have a healthy return and good operating results. 2019, we saw a slowdown in our portfolio, mainly because the bank decided to start preparing more for the next decade, which we see a lot of challenges and changes coming up. So we focused more internally in preparing our systems, preparing our policies, and just getting ready for the years ahead. Now for 2020, it's quite interesting because it started with a lot of positive prospects. We saw increasing activity in all segments, dry, tanker, LNG, everything. Being in shipping, of course, nothing is predictable. So we had in turn a lot of unfortunate events and developments. The most recent one has been the effect of the coronavirus, where it has created concerns to everybody. We are following, from our perspective, from our bank, we are following very closely the developments. We have not halted our activity, because when you decide to do something, you take a longer-term view. But on the other hand, we remain conscious and very close to our clients, trying to see what's happening next and identify any potential issues as early as possible.
Thanks, Danai. Philipp?
Yeah, hello everybody. I think the last year was from a lending perspective, a quite boring year. But as a banker in these days, you like boring years. So we are quite happy with 2019. And some of you may ask the question, why Berenberg and lending, as this was not that common in former years. So we raised some years back. We raised a fund from the insurance and pension funds scene, and we had to convince them into shipping some 3-4 years ago, which was a heavy exercise at the time after so many years of crisis. But this fund is now up and running. It has doubled its size last year, so we are now approaching the 500 million. And last year was really investing into that strategy and offering conservative debt, traditional asset-based lending to our clients. So we did some 400 million new business last year, happy with that. And the most important thing, also our backing insurance companies are happy with that. I say that especially because I think that we here in the industry will need these kind of sources going forward. I think the funding of a bank especially for niche activities like shipping is from a macro perspective. We need to make sure that our investors in the background, be it the bank investors or these kind of LPs which back the banks through such funds, that they start to look at shipping more positively again. And I think this is the current trend which we see, that the last 10 years private debt has risen the scene, and more recently it has also been, let's say, more active in niche markets like shipping. And we are very happy that this happens, and we try to be conservative, prudent, and if we can go on like this, I think we have good times ahead of us, because these investors, they look for yield, they look for attractive risk-return profiles, and with our conservative approach, I think they are happy. So also our future perspective is kind of positive. I think for the rest we speak a bit later.
So I'll move on to Evan, but touching on some of the points that Philipp was mentioning, was starting a bit boring and then turning a bit exciting. So there's your intro, Evan.
Yep. CIT, it may be a name some of you were vaguely familiar with. It's been around for a long time. It hasn't been active in shipping since 2015. It's always had a presence, and at the end of 2018 decided it wanted to rebuild its shipping practice. I joined them. We have a small team, but we're quite active this past year. So 2019, an active year, senior debt. So we have $1 billion of portfolio. We did about half of that this past year in 2019. We have 30 clients worldwide, a third of them here in Greece, so we're happy with that. And we're going to do the same thing this coming year. Basically a deal a month for standard type ships for owners in Northwest Europe, in Greece, and in the US. I think that's it.
Thanks, Evan. And Vassilios?
Yes, thank you. So for Citi, 2019 was an extremely active year across the board, both on the origination of new financings, if you wish, which is the topic of this panel, but across the board, whether there's anything on the episodic side and capital issuances, and of course, with all the regulatory elements and many other considerations, increasingly consolidation becoming a topic that we're seeing. On the back of that, the portfolio continues to grow in a very specific way, in the Citi way, i.e. how we do business has always been the case. We are corporate financiers, we're not asset financiers. If the corporate works, then we can do multiple things disregarding the asset class, the LTV, and multiple other things. So all in all, the principle of that is exactly the same since the first global shipping head, Walter Wriston, was doing business with Aristotle Onassis. So we continue down that path, very cautiously growing our target market, our portfolio, and of course our footprint and impact in the industry.
Thanks, Vassilios. Christos?
Yes, I mean, I'd say that we've seen tremendous changes in ship financing the past few years. Vassilios mentioned regulatory changes and Basel regulation changes. I think this has had a major impact on a number of banks. You've seen a lot of household names here in Greece exiting the industry, partly because of change of strategy, partly because of losses, partly because of lack of a sophisticated business model. Vassilios touched upon event-driven financing. Capital structures are becoming more sophisticated. Companies need more than just senior debt in order to be competitive and take advantage of windows as they open and close. So the banks that you see active these days are banks that do have a diversified business model. They can do more than just lend. They can be advisors across the capital structure for their clients. And I think this is the differentiating factor, and this is what you're going to see the companies prevailing, the banks prevailing in the future. What we didn't touch upon so far is environmental matters. They have really taken the banking industry by storm. I think our two institutions have been quite instrumental in highlighting these issues. It's not a perfect solution, but it's a means of creating awareness on environmental matters, which are becoming more and more prevalent and which will be with us for the years to come as well. For us at DNB, it's been an active year. We've raised about $12 billion in totality of bank debt. We've kept about 3.5 on our balance sheet. But more importantly, we have raised about 2.5 in bonds and equity, mainly in the Norwegian market, which, despite the tough capital markets on the bond side, has been quite active.
Okay, thank you, Christos. And I wanted to kind of elaborate on one of the points that you mentioned, and obviously probably a very current topic, and certainly at conferences and bank panel discussions, largely because it will kind of link into how we see traditional bank finance and finance in general developing over the next 10 years. And you touched on the Poseidon principles. I think that's probably, as I understand it, it's around the 17 mark in terms of signatories. It's something that is gaining momentum, certainly throughout the course of 2019. And I'd probably start back with, say, for yourself and Vassilios as signatories as well, that, how do you see that changing financing and shipping longer term?
On the Poseidon principle, I'd like to say a couple of things because there is a lot of impressions or miscommunication. It's not the bank's intention to become policemen for the environment. Not at all. The reality is that new employees in the bank, they care about how responsible the banks are towards the environment. Our investors, they care how we deploy our capital. So, shipping is an extremely important industry. It carries 80% of the goods worldwide. It needs to have a responsible environmental footprint. Again, with the Poseidon principle, our goal is not to be a policeman or to penalize or to block people that do not fulfill certain criteria. But what we've said is there are certain IMO targets that ship owners have to follow, and it makes sense that our portfolios will follow that trend as well. So this is what we are monitoring, and this is what we are registering. Many times I get the question, are you going to diversify or are you going to block and not finance clients that do not fit that profile? And my answer to that is we always select clients based on various criteria. Could be the credit strength, could be their history, could be the performance in the past, or could be their environmental footprint. So this has always been part of our criteria, and it will continue to be so even more going forward.
Thanks. Yes.
I can only fully echo what Christos just said. I do sincerely believe that the Poseidon principles do not in any sort of way create a sort of barrier with regards to shipping finance and how all the institutions which are signatories, and I think it is expected that this will continuously increase, provide shipping finance, traditional shipping finance to the shipping community. I think it is de facto the case that all ship owners which are here and active will have to follow the IMO regulations and all the targets that it sets. And as far as the banks are concerned that are signatories to the Poseidon principles, this is exactly what effectively we are saying with regards to our portfolios. So there is no misalignment between what an owner needs to do to what the corresponding shipping portfolios are trying to do.
And I suppose just to touch on, again, one of the points that you raised there, and I suppose partly linking it to IMO, it does, whilst certainly 2019 seems to have been a kind of a vocal year for Poseidon principles, it's IMO and transition in the regulation certainly was not necessarily a surprise. It was something that was coming. So to what extent have these principles actually already been in place to some extent, and they're actually just gaining more momentum now rather than anything else? I think it's Danai.
You are actually absolutely right. The Poseidon principles might be something new, but the idea behind them, it's something that has been around for years. environmental sensitivity and sustainability is not something that is being invented now. The Poseidon Principles and any other relevant initiative, it's a way to assist the acceleration of the sustainability shift rather than reinventing something that's been there.
And I want to take the point to Evan and Philipp as well, in the sense that obviously to some extent, as with everything, and there is always a transition period, and to what extent, how you view those policies and ultimately the market's transition in those fields and gaining compliance.
I think I would take it a bit broader in the sense that the ESG is on the radar of every investor and stakeholder in what we do today, and so it's a bit more than the E in things, which is I think very important and has come up the ladder rather recently. But the other topics, the social and the governance, is also a topic which I can assure you from our conversations with many investors is a concern to these investors because all of them are more regulated these days, and that's why I think we as a bank can only do or cannot do otherwise than being proactive on that. The regulators will force us anyway, or are about to force us, in Europe at least, to take these things serious and not only to marketing things, but to hard fact take them into our processes. I mean, a credit process, and we are used to do risk assessment. This is probably our core activity and core competence, at least it should be. And the ESG assessment of things will become a parallel activity, which is part of every of your financing requests going forward. So it is also of our risk assessment. I think this is the reality we face. And by the way, gradual, I mean, it's already done. We have scrapping clauses in our credit agreements these days. We talk about sanctions and protect you by talking to you about these things. So I think there are already steps taken in this broader approach in the recent years. So it's only a gradual development over the next years to come.
Yeah, it's interesting listening to some of the conversations in the past 2 days. I don't see the concern that the banks will have to be a policeman. So I think already public policy, so sulfur regulations and public sentiment are greater pressures on ship owners in the shipping industry. And on the other hand, bankers are driven by banking efficient owners. Are they ballasting correctly? Are they avoiding empty back legs? Are they investing in energy efficient engines? This is how you pick owners that are going to succeed competitively. So the interests are aligned. We're trying to pick the smarter owners. You guys try to pick the smarter bankers. And public policy and public sentiment are pushing everybody in this room in the same direction. So I don't see any misalignment.
I think one last point, at least from my point of view, is that we are increasingly seeing the charters, and therefore those that actually provide the earnings for the corresponding vessels, to be extremely interested in this, and I do believe that they will be aligning themselves also. So I think, it's not going away. It's here to stay. It's extremely important for the investors, whether it is investors at Citi, at DNB, at wherever, also investors for your companies, but over and above that, I think it is coming with regards to the charterers. And I think just trying to hide behind one's finger and saying this is not happening is probably would take someone, whichever institution that is, to most probably a very negative outcome.
I think Evan put it very nicely. These are not controversial issues. When it comes to sanctions, when it comes to environmental matters, these are things that we are all jointly responsible for. And as an industry, we need to really take it seriously. We need to proactively come up with solutions, not let others force solutions on us. So the more proactive we are, the more aware we are on matters that are non-controversial, as I said before, the better the outcome will be in the end, and hopefully we're going to avoid the whole controversy we had around scrubbers, if we are proactive on matters like this.
To bring the discussion slightly back to, I suppose, the pure finance side of it, and I'll throw this question open to the panelists. On the basis that there is, in all likelihood, to be that development, there are already green shipping companies or developing green shipping companies. Will that make finance more available, perhaps even cheaper? And I'll take volunteers to answer that question.
I will jump in first, because many times I get the question from clients, okay, if we have an environmentally friendly project, you know, how many basis points cheaper can we borrow? That's not really, it's a good question, but it's not really the heart of the issue. I think where we're getting at is pursuing environmentally friendly projects will give you access to capital, which might not be available if you're not. So the price at the moment might not be better, but you have a much broader access to pockets of capital. And I think as time goes by, as the various pension funds, as the various endowment funds are pushed by their investors to invest in environmentally friendly technologies, in environmentally friendly industries, you will get access to a broader range of capital if you are perceived as being environmentally friendly.
I agree with Christos, and I'll jump in. This is a brand new sort of thing. Right? And it's not only applicable for shipping, it's applicable for all industries. But increasingly, you are beginning to see pricing linked to ESG. You're seeing it in quite a few mature industries and many others. So effectively, if you hit specific, and these are public insurances, so anyone here can specifically look them up, and but there is specific pricing, and it's not only a bank that would provide that, but also institutional investors that agree to that, and effectively are saying, if you hit these specific milestones with regards to any of the spectrum of the ESG agenda, and again, we're constantly focused on the E, but as Philipp said, the S and the G is also extremely important, but effectively, if you see specific hurdles, then pricing actually reduces. So it is increasingly coming into play. It hasn't happened yet, maybe at shipping, but at the same point in time, the tide is irreversible, and I do think that at some point it will come to this industry also.
Great, thank you. Yeah, sure, go ahead.
No, it's an interesting one. I've said no to tanker deals because they didn't have oil major approvals. I've seen people turn down tanker deals without this SIRE inspection, a good SIRE inspection. I haven't heard of a senior lender walk away because he didn't have the right green metric. It is coming, but that's not the measure yet. But the good news is all of those things are pushing towards an environmentally friendly direction.
Even when it comes, I'll disagree with you, because when it comes to scrapping, for example, I mean, we have not done a single deal without responsible scrapping language. And we can debate what responsible scrapping means, but it's something that is creeping in documents, and I think it's extremely important for people going forward. And as Vassilios said, it's not something that's going away, it's not something that's reversible, we will see more and more, and it's critical that we open our eyes and are proactive in shaping how things are drafted, what is being put in there, because otherwise we will have solutions, and I gave scrubbers as an example, imposed on us, which are not efficient or are not the way we want them to be and suit us.
Now, the point taken on the scrapping conventions, absolutely right.
And also one thing I want to add is I agree completely with Christos, and this is something new, this is something that is transforming. So all the measures taken by the bank now doesn't necessarily mean that it's 100% accurate or complete or perfect. We are also learning, we are also evolving, but we have to start from somewhere.
I'm going to change the topic slightly in a slightly different direction. I think one of the topics I would typically go for at our usual panel discussion would be the state of the market. But actually, having thought about the state of the market, I was thinking that maybe it's not the best topic to discuss. So we'll make a slight change to that and actually specifically look at the state of the finance market. I think what I mean by that is that obviously there's a pick and mix option of variety of different financing, different lenders, different financing types, leasing. And a lot of the banks here have been in the ship finance market for a very long time. And I think the question I want to ask is, how do the banks see this now wide variety of finance that is out there, whether it's the leasing, is that healthy competition, is it part of everything? Actually, do they want to see their borrowers diversifying the type of finance they have? What's the general impression of how the market is developing on a pure finance basis?
The matter of the fact is that there hasn't been a time where only traditional bank financing has in place. For the last 20 years, as far as I remember, we have seen the high-yield bonds, the private equity, we have seen the capital markets, we have seen smaller banks, bigger banks coming, going. So this is like how the market operates. Whenever there is a need for any type of financing, there are other firms that come in and can complete and fill in the gap. And this is definitely that's something that I think will go on in the future, and we will continue seeing players coming in and out and changes happening.
And I think to touch on one of the points that Christos mentioned in terms of the kind of the sophistication of some of the transactions and the deals that are coming through, I think to give a theoretical example, to see a European bank lending to a Chinese leasing company, lending to a Greek owner in a joint venture with US private equity, buying new builds in Korea, is something that maybe a few years ago would have been considered exotic, but it's now something that is becoming a bit more mainstream. So, from what I'm sensing is that certainly it's actually all of these different flavors, different things that are on the finance menu becoming part of the market and actually working together collectively to kind of satisfy the different appetites that are out there.
Actually, in our case, it's more than a third of our business is partnering with private equity or some other alternative capital in the same transaction.
Now, and I think to move on onto one of our last topics as time starts to run short. Certainly, we're in Greece today, and the Greek market is certainly one of the most important markets. I think on that, it's certainly a market where the whole world looks in terms of whether it's for asset play or the types of transactions and deals that are being done in Greece. And I think I'll throw this question open to each of the panelists in terms of obviously the importance of Greece and the Greek shipping market. What aspects you see maybe need to develop, but ultimately, what is it that attracts each of you to the Greek market?
So I agree with you. It's very well recognized that when it comes to sea transportation, Greek ship owners are among the leading players globally, with the Greek fleet representing almost 20% of the global fleet. Some aspects that I think have made Greeks so successful is that they're entrepreneurs in what they're doing. They're they have the ability to identify changes early enough and the capacity and ability also to adjust and adapt to the new situation. And I think this is something that we will always see in the Greek ship owners. We have already started seeing shipping companies taking measures towards the next decade, and we will definitely continue to see that happening more and more. From our perspective, ABN AMRO is and wants to be there to support that and support any initiatives taken towards that direction. It's not something that will happen today or tomorrow, but it's definitely something that we will see in the years to come.
I think to touch on one of those points as well is that certainly, aside from one of the biggest fleets around the world, it's also, as I understand, one of the youngest. So that is something, it's a market that actually you can see potentially driving change in terms of renewing fleets and having environmentally friendly ships. On that. I mean, there may be a fairly common view or not, but is it too early? Is it the right time to actually, really look at fleet renewal, new buildings, eco-friendly ships, which it is there in the Greek market?
Jasel, I think it's already happening, and the pace and the extent of it, I think, will be decided by the owners themselves, who know the market much better than us.
Yeah, go ahead, Philipp.
Yeah, we are here now more than 50 years in the Greek market. We have never lost money. This is something we like. Secondly, we like that there's still a relationship approach to the market. So we like the family-owned, very dedicated and committed people that are here, and which allow us to really do, let's say, the risk assessment we like, also based on a human element. That we should not miss at all. And thirdly, we and I fully agree, we like the ability here to play the capital structure since many decades. Yeah, people know how to put this together. There's equity from the owners. There's the openness and flexibility to work with others, and banks come and go, but you always manage to find enough banks for your business. So we are among those to stay here, and that's what we like about the market. Thank you.
If you like shipping, and you like to finance, and you like to work with owners, operators who know their business, this is a target-rich environment, as they say in the American movies. You have the biggest problem. You don't have to go anywhere. Your biggest problem is getting from Glyfada to Kafisia in an afternoon, and you really can do all the business you want in this place. We've also had the good luck and the benefit of not having losses in this market. And in this market, okay, I have enough gray hair that you can say, when there is a problem, and there will always be a problem, there's enough people here who can help you with the problem. Et voilà.
Yeah, I'll echo what everyone has said. I think, clearly for Citibank, shipping was the first global industry of the bank as a whole. We have been in this country for over 60 years. We don't operate in a satellite format. We are a branch of Bank of Greece with offices here, and we believe in this market. We believe in our clients that operate in this market. We are here to support them, whether it's a good market, a bad market, or whatever that is. So ultimately, this is how we do business. We will continue to do business here. And I think, look, it says it all in terms of, the Greek ship owners operate the largest commercial fleet globally. They control and operate. And as a result, this is the place to be. It's always refreshing to be here. You can feel, smell, and sense shipping, and you cannot get a better feeling in terms of being here and doing business with this community. So we will continue to grow this portfolio, and long may Greek shipping be here and thrive.
Great.
I think the main difference between Greek ship owners and ship owners around the world is that the Greeks are tremendously proud about what they do. They're extremely passionate, and they're extremely hands-on every detail, from financing, from operations, from everything. I mean, it's not uncommon to meet the owner who at the same time is having a meeting or a discussion with an engineer about something extremely technical. You do not see that around the world. I think if you deal with Greek ship owners, you are prepared for everything that shipping can throw at you. So it's a fascinating market. It's a fascinating market. And it's such a big cluster that if you do it the right way, you can, as a bank, you can really have a good return, you can have a very solid performance, and you can have it as your flagship market in the portfolio by far.
Thanks, Christos. And before I thank each of the panelists, we have a few minutes left if there are any questions from the floor. And I think based on that, we will be saved. So thank you to all of the panelists, and thank you very much to the audience to keep listening.